Hello, how's it going everyone? Today I'm going to talk about Lucid Motor, which is Tesla's biggest competitor. And if this is your first time on my channel, please give me a like and subscribe and make sure to turn on your notifications for the next video. And today I'm going to talk about Lucid Motor, and Lucid just started its productions last quarter. Take a look at this car, beautiful car, and it has 1,100 something horsepower, and it's starting at $77,000, and it's range up to 520 miles. That is a good amount of battery that you can last for a round trip from city to city. Check out this car, beautiful, right? Super nice car, very clean. So Lucid used to be one of the hot spec that everyone was excited about. And today what we're gonna talk about is it $22 a good entry for investors that haven't had a position yet? And what you should do if you are a long-term investor. And this video, I'm gonna explain the technical analysis and the financials, and then let's do some due diligence together and see if this company at this valuations is a good investment or not. First, let's look at the technical analysis real quick. So when you're looking at the chart, it was at $65 not too long ago, right? Put back down to $20, a strong support levels after the SPAC merger was complete, right? So this is all happens when SPAC mergers complete. It's always buy the rumors, sell the news when the SPAC happened last year, right? So after that period was around $18 and it popped back up to $60. Now go back down to $22 as the market crash, right? So is this $22 a good time to buy? If you are already a investors in the long term, right now just wait for a little bit, because so right now it looks like the $20 is the next support level. $22 is still haven't found a support yet. If you are a long-term investors or someone that is looking into a buy opportunity right here, I would look for the $20 support level. $20 support level would be a very strong support level. Hopefully that they found the bottom on $20 and then consolidate there a little bit before the bounce back to the upside, right? And if not, and if $20 broke, then would be the next support level would be $18. $18 is a key level. If the $18 breaks, it's gonna go much farther, and 18 would be a really important support level from this downtrend. Okay, so as right now, I would just wait. Look at the RSI, it's already oversold. Look at the MACD right now, it's sending the mixed signal, right? So right now we are pretty much on the oversold territory, but it's not the bottom yet. I don't think Lucid right now is at the bottom yet, because due to the overall market, the war's going on, inflations, and also the Fed meeting is coming up this month in March, right? These are key factors to drive the overall market where Lucid is gonna head into, okay? And also another factor that why I think it's not bottom out yet, because Lucid just decreased their guidance on their productions on 2022. So let's go ahead and look at their financial, go ahead and look at their guidance and what their futures and what their productions are looking like. Okay, so as we all see that Lucid is still having $6 billion in cash on hand, and also 2.85 million square feet of expansions on Arizona for their factory. So they spend a lot of CapEx try to build a factory. But now they have $6.2 billion on hand that keep this project going, right? And look at the revenue. Their revenue is at $26 million, right? And they deliver 125 cars, okay, for the fourth quarter. And unfortunately, that Lucid decreased their forecast from 20,000 delivery vehicles to 12 to 14,000 vehicles for 2022. The reason, because that, as everybody knows, supply chains and semiconductor issues, and they had to cut their productions. So that's gonna affect their 2022 revenue, right? And and the cash flow, right? So they need much more cash flow to get Lucid to the maximized production level, right? This is all the EV cars right now. Lucid is in the beginning, right? In the beginning of the process of get this thing rolling before they get profitable. We wanted to have as much revenue as possible, to have more car deliveries as possible, right? But one of the good things is they had 25,000 plus reservations, so that give us the potential of $2.4 billion sales. So that is already on the boat. People already waiting for the order. So that's why Lucid had to deliver those vehicles. They had the demands, they had the customers, waiting for the productions. Customers like the vehicles, already having $2.4 billion right there waiting for them to make the vehicle. A lot of money on building these facilities. They're getting the process going. Right now, Lucid is just in the beginning of the process of getting all these vehicles delivered to everybody, right? And also look at the expansion on the footprint. There's 20 locations on the key areas in the US already have the locations, so people can go into the stores and take a look at the Lucid car and how it's actually gonna look and kind of see what kind of technology that Lucid has, right? So this is a good marketing strategy, okay? But also you think about all these 20 locations, it needs cost, right? It needs the money to operate. That's why Lucid needs to get the productions going, so that way that they're generating more cash flow, because having more locations means you having more expense, more cash you need to burn, and it's more expensive you need to control, right? As you look at the balance sheet and income statements, right? So since Lucid was just a pre-revenue company, right, but now it just started productions last quarter, so there's not much going on the financial statement, right? Key thing that we need to look at is just the cash on hand, right? And also the liability that they're holding, right? The revenues is $27 million. Key thing is the research and development expenditures and the G&A, right? Net loss is $2.5 billion on all those G&A expense and the research and development expense. So that's what I'm talking about, $2.5 billion net loss on only a few vehicles that they deliver. So $6 billion on cash. They pretty much had 3 years to get the company moving to be profitable. As an investor, you need to watch out the cash burn over here, right? So you compare to the net loss. So you had 3 years to get this company profitable. And otherwise, you're gonna have to borrow more debts. So if they borrow more debts, that's gonna be more interest expense that you're gonna be putting in there, right? So that means gonna decrease your profitabilities if you got more debts on hand, because all the interest you gotta pay. All the Wall Street analysts are forecasting Lucid right now should be at $38 right now, right? So they give it that 70 to 80% of upside from this $22. Okay, so based on the technical analysis and the financial that we're looking at and the future growth of this company, I think that we should not be rushed. Like if you're not already an investor, right? If you are a long-term investor, you should just wait and let's see if Lucid can hold this $20 support and $18 support. If they break down that, then you might be dollar cost averaging. As new investors, I would just stand on the sidelines and watch to see if Lucid can be able to bring up the production numbers. Of course, we all love the product. The car is looking really nice, good enough horsepower, it's looking great, and has a lot of potential to compete with Tesla. As an EV company in the US, this is the second one that I really like compared to Tesla, and this one has a lot of potentials. And guys, I hope this video can help you guys to do more due diligence on Lucid Motor. And if you think this video is helpful, please give me a like and subscribe, and make sure to turn on your notifications for my next Lucid video. Thank you so much, guys.